Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools, Jason Hall and Lou Whiteman, giving a 1 to 10 rating to the company Lou said looked less boring than our runner-up choice for this episode. It's energy storage company Fluence Energy, ticker symbol FLNC. Let's look at the business first, including factors like industry and competition and exactly what it does. A 10 is invincible, a 1 is hopeless. Lou's giving a 6, Jason's giving a 7. We'll start with Lou's lower 6.
So in my defense, the runner-up was an insurance company, so almost by default, guys, it's going to be more boring, right? All right. But anyway, all right. How can I say boring about this, though? Okay, Fluence is a leader in grid-scale energy storage solutions. Energy storage is a huge deal, especially in the world of green energy, where, the sun isn't shining all the time. We've all talked about that. Fluence has important partnerships in its origin stories, created as a joint venture between Siemens and AES. The knock here for me is energy storage is, in theory, a very commoditizable business. There are a lot of companies poking around here, a lot of varying solutions. So will we have pricing power? Will we have a long-term great stock? And of course, there is also a lot of supply chain risk since they have to acquire all these batteries. There's a lot of work to be done, just a lot of fixed costs to make this work. So a 6.
So my 7's just a little bit higher than Lou. And part of it, I think the business model is built to optimize for the challenges in the space, like using contract manufacturing for a lot of the product manufacturing gives them more flexibility on their operating expenses and leveraging that corporate partnership with the two parents of the company. You combine that with the secular tailwinds behind energy storage and managing that storage, that stored energy. And I think there's a lot more to like maybe than Lou's slightly more pessimistic outlook.
I don't know if we mentioned the obligatory word. Why Fluence is not boring because what powers AI? It's energy.
There you go, baby.
Management.
There you go.
A 10 is Warren Buffett. A 1 is Homer Simpson. Lou's at a 6. Jason's at a 7 again. Lou, go ahead.
So we have a relatively new CEO here, Julian Nebreda, I think it is. Took over in 2022. He came down from the board. He comes from AES, has a lot of experience, including emerging market experience, which I think is important here. One thing to note here, though, is just a fact of life is that AES and Siemens, but especially AES, is calling the shots. The first two CEOs have come directly from there. They have something like 80% voting control between them. So kind of on the management point, just to make the point that even more so than a lot of companies, they're calling the shots here and we're along for the ride, which, it's fine. It should work out. They're good partners, but I'm stuck at a 6 just because there's not too much to get excited about.
Yeah, Lou, I agree. I think that's actually one of the bigger risks to shareholders with the business is if those two parents don't agree at some point. We've seen where all the interests align, these things can be great. But as soon as there's any disalignment of interest, it can blow up these sorts of deals. But looking at management specifically, the reason I came down on a 7, to me, 7's kind of a baseline. These are competent people. Anything below that, then again, this is the way I think of it. Start getting into 6, it's like, I don't know if I want these people running my business or not. There's a lot of really skilled people that have deep backgrounds in the disciplines that they lead. And I think that matters a lot. It's whether you're talking about technology, product development. Think about this is a software and a hardware company, both. You need people that are skilled in those different disciplines. They have great operations people that have been involved in manufacturing at multiple organizations across the kind of precision manufacturing that is involved in this. And then you combine that with the tailwinds. I give them a little more benefit of the doubt. Fluence is new, and the cycle has really been unfavorable for a lot of it. So I don't want to ding them too much, but they're certainly going to have to earn a higher score.
You come for the stock advice. We leave with family advice, right? When the parents fight, it's the child that suffers.
That's right.
You can't get higher than a 6 or 7 score management. Financials. A 10 is a fortress. A 1 is yikes. Lou's at a 6. Jason can't quite get to 7 on this one. He's at a 6.5. We'll save him for later. Go ahead, Lou.
It's just got real dark with the family stuff. But anyway, I'll power on, guys. I'm at a 6 here. The balance sheet is very okay. They just raised $400 million in convertibles, so they have a good amount of cash through convertibles. There are no sustained profits here, which to some extent is no surprise for a young and growing company and nothing really to worry about. But it is interesting to me, given the high costs and the lack of my fears about a moat. So I just don't know if I necessarily see them outgrowing this profitability question. Nothing to worry about, no slam dunk, so a 6.
Yeah, so just as with management, I'm not completely holding the downturn across that industry that's been so challenging against them. I'm also not going to give the balance sheet and the financial results extra credit for that. But if you look at the things that are happening, the business has flipped from cash burn in the trailing 12 months to cash flow positive over the past year. They didn't do that by depleting the balance sheet. We've seen tons of companies just deplete their inventory and say, "Oh, we're cash flow." Well, you didn't spend any cash to build your inventory back up. They've actually increased assets, short-term assets, and held pretty steady on working capital. So, and to go to cash flow positive and go through that, I think that says that there is certainly potential there to continue to do that as scale grows. And I think that's where we could see the push to big profitability, particularly in growth and cash flows going forward. But again, I need to see more. This needs to be sustained for it to earn anything higher than a 6.5.
Right, Jason, let's move on to valuation. How well will Fluence's stock do over the next 5 years? How safe is it? 10 is a sure thing, 1's a lottery ticket.
So I'm going to go with 10 to 15% returns. I'm optimistic. I'm a shareholder here. I'm optimistic that it's better, but being realistic with the challenges they're facing, the cyclicality of the industry, I'd be very happy with that range. Safety score, I came with a 6, actually lower than what Lou's going to tell, because two things. Number one, the balance sheet's okay, but this is an industry where margins are going to get squeezed. Their software business is tiny. Recurring annualized revenue is less than $200 million a year at this point. And related party transactions, almost half of revenue. So if again, getting back to the parent thing, if these joint venture businesses go sideways, we saw it in the solar space where there was a joint venture between two of the largest solar panel manufacturers. They became disaligned and the value was destroyed and they ended up selling that asset off for a loss. If that happens here, it could hurt us. If the tailwinds and the relationship remains favorable, this stock might be cheap. Right now, I'm just going to say it's a really interesting risk reward opportunity.
Yeah, so I definitely see the revenue growth from here. I love the overall opportunity. I see the need. I can see the argument for profitability to spike higher as new management focuses on profitability and we get scale benefits. But I keep coming back to the commoditization question and the pricing question. And I don't know if Wall Street will reward revenue growth or will want to see profit spike at some point. So I'm at 5 to 10% kind of as a market performer. I think it could go either way. For safety, Jason, I'm a bit more bullish just because there is such a need for these assets. Anand, you mentioned AI. It feels like that this has to work out to some extent as far as there is a safety net here. You also have the corporate parents as sort of a backstop. So I feel kind of safe about this. I just don't know what Wall Street will think of this business in 5-10 years as it matures.
Time for everyone's favorite topic. Jason, is there a company in Fluence's space that you like more?
A year and a half ago, I would have said STEM, the battery and software play, but it's been a mess. They blew through their balance sheet capital, weakened the business, and have recently decided to get out of the battery side of the business and focus on software. I think it's the right move for the business, but it's just turned into a lottery ticket for the wrong reasons. While Fluence is this interesting risk reward that, again, the risk I think contends on its two founders remaining friendly and on aligned terms.
Yeah, definitely not STEM is a good answer. But, I don't have anyone here just because I really believe that if this turns into a good business and a good investable business, Fluence is as good a bet as anyone to make profits. As I've said, my question is more about kind of how this industry evolves than it is about the individual of this company. If you think I'm wrong, and I may well be about, just kind of how profits emerge, then Fluence is as good a bet as any.
Yeah, there's not a lot of pure plays. A lot of it's integrated into large diversified manufacturers or Tesla, right? So not a lot of choices really.
Well, thank you to both Jason and to Lou. They've given Fluence an all right overall score of 6.4 out of 10, with each category pretty consistently at that level. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a Moneyball stock. Till then, Fool on. Luckily, I don't provide any wisdom, so I'm only comment area.